Round three, summarizing comments from each side. First, summarizing against the motion, blame Washington more than Wall Street for the financial crisis, Alex Berenson, investigative reporter for the New York Times.
I want to thank Neil for sort of making our point with his very last remark, where he said that New York became more powerful than the rest of the country. I do think that, to some extent, all six of us forgot something when we were presented with this question that only came out in the debate, in the discussion in the last 20 minutes, and that is the internationalization of the financial system. That when in 2000 the banks said to Washington, we don't want these regulations on credit derivatives, what they also said was, if you force this on us, we are going to go elsewhere. And it was only a few months ago that we were hearing that London was going to be the primary financial center in the world, followed possibly by Shanghai and Hong Kong within about 5 to 10 years. Now, I think the city in London is getting even more badly hurt right now than New York. But the point is, actually, that Washington versus Wall Street is a false dichotomy, because the banks became so powerful within the sphere of the financial world that they essentially told Washington, if you try to regulate us strictly, you are going to lose our business. Jobs are going to go overseas, and there will be no regulation at all. So you can have the SEC and the Fed and weak regulation, or you can have no regulation. Those are the choices that you face. And they meant it. There were jobs shifted to London. A lot of jobs shifted to London. Jobs shifted to Hong Kong. And I think that when you forget that, it becomes easier to blame Washington. If you remember that, you will vote against this resolution. You will put the blame where it belongs, on Wall Street. Thank you.
Summing up, for the motion, John Steele Gordon, author of An Empire of Wealth.
Well, I just want to say that while Wall Street certainly needs reform, it always needs reforms, and it's constantly being reformed, has been for 200 years. But it doesn't need reform as badly as Washington, specifically Congress, which is a profoundly sick institution. Institutions tend to evolve in ways that benefit their elites, and if you want the poster child for that, it is the United States Congress. I also want to just add one thing on the people on the other side have been saying that Wall Street took their checkbooks down to Washington and lobbied to get the regulation they wanted rather than stricter regulation, and actually said that therefore congressmen were the victims of this. I'm sorry, but Wall Street was not debauching a virgin, it was paying a harlot.
Summarizing against the motion, Jim Chanos, founder of short-selling investment firm Chanos Associates.
Boy, how do I follow that one? Well, again, we've had a lot of lofty philosophical questions batted back and forth, but there have been very, very few facts put forth tonight. And I want to stay with the facts. So we'll just consider one instance, Lehman Brothers, which when it failed had adequate regulatory capital and was still profitable in its trailing 12 quarters. Yet when the credit default swaps were settled for Lehman Brothers a month later, its debts were marked down 90 cents on the dollar. Now, its debts at the time, in terms of funded debt, were $150 billion. Stay with me on this. Numbers are important when it comes to Wall Street. So 90 cents off on that dollar bill means the debt was impaired by $135 billion. Lehman bonds still trade around 10 to 15 cents on the dollar 6 months later. There was $20 billion in equity at the time. That tells us that the hole in Lehman's balance sheet was roughly $150 to $160 billion. To put that in perspective, the hole at Enron, when the dust cleared, roughly was $60 to $70 billion. Lehman was twice as bad as Enron. We haven't gotten to AIG yet, or Bear Stearns, or God knows what else. Ladies and gentlemen, malfeasance trumps incompetence for the purpose of this resolution. And I urge you to remember that when you vote.
Nouriel Roubini, professor of economics and international business at New York University's Stern School of Business, will summarize for the motion.
Well, you know, it's not a debate about robbers and cops, because there is a huge amount of evidence that actually financial development is very beneficial for economic activity. Countries that are more financially developed provide lots of services, you know, credit cards, mortgages, commercial real estate, insurance, risk hedging, you name it. It's very important and beneficial. But we know that when there is financial innovation, sometimes it becomes excessive. There is asset bubble, there are credit bubble, excessive risk-taking, people become greedy and all the rest. And you can have a system that is so regulated like some countries, like India, when never there's a bank that is ever failing, but you want actually a market economy where sometimes some banks fail. But you don't have a system in which everybody is collapsing, you have systemic risk. And the distinction there is you want innovation, like in any country, because it's going to be beneficial, but you want to avoid crisis. And to avoid crisis, you need appropriate rules, institution, prudential regulation of the financial system. Not too much, not too little. It's a trade-off. It's not a black and white. And the difference between a system that works, that has innovation and provides benefits and avoids a crisis, and one in which crises occur over and over again, has nothing to do with Wall Street or the greedy bankers, you name it, has to do with the quality of public policy, proper supervision regulation. That's the distinction, has been always the case across countries, across history. So let's look at the big picture.
Thank you, Nouriel Roubini. The motion is blame Washington more than Wall Street for the financial crisis, and summarizing her position against the motion, Nell Minow, editor and co-founder of the Corporate Library.
Politicians are accountable through the political system. You don't like them, don't vote for them. You want to vote for candidates who don't take money from lobbyists? Be my guest. That was a policy that got Barack Obama in part elected. That's great. But the people who stole money to send it to Washington are the people on Wall Street. Is there one shareholder of Bear Stearns or Lehman who wanted that money to be used to weaken regulation? No, it wasn't. There's a huge moral hazard involved there. The same moral hazard that involved them paying themselves hundreds of millions of dollars. The return on investment for CEO pay is less than a piggy bank. And that's because they've corrupted the system. They didn't need any help from Washington for that. They did it themselves. So please vote against the resolution.
And finally, summarizing for the motion, Niall Ferguson, professor of history at Harvard.
Well, ladies and gentlemen, it's not very often that you hear Washington, D.C. defended by a journalist, a former government attorney, and a short seller. The journalist told us it would all have been absolutely fine if the banks had been run as well as the airlines. When did you last fly Continental, Alex? Jim Chanos told us that corporate fraud is endemic in corporate America, and this goes from Enron to Madoff. What they agree about, and here they do agree with us, is that, in many ways, Washington is in hock to Wall Street. The difference is that Nell Minow thinks that Washington, the legislators, poor things, are the victims in this strange case. Now, that is where we part company. On our side, we see them as anything but the victims. We see them as the key perpetrators. And let us not forget just how far this has gone. Who was, Nell, the second biggest recipient of donations from Fannie and Freddie? Yes, it was the President of the United States, Barack Obama. And let's not forget that among the firms that contributed most generously to his campaign were Goldman Sachs, Citigroup, JP Morgan, UBS, and Morgan Stanley. What we need to contemplate, ladies and gentlemen, is the Latin Americanization of the American political system. This symbiotic and indeed corrupt relationship between Wall Street and Washington is the thing that is rotten at the heart of the United States. It is the principal explanation for this crisis. And that brings me to the key question you have to ask yourselves. Who has to defend the public interest? Is it the investment bankers, the hedge fund managers, or is it your elected representatives? Ladies and gentlemen, it is perfectly clear that it is Washington that has failed to defend the public interest, and I fear it is continuing to fail to do so. Please do vote for the motion.